Welcome to my new series of stock market investing tips. I'm Balance Sheets Matter, and I'm going to share my top stock market tips that I've learned over the years that have helped me make millions of dollars in the stock market. So make sure to smash that like button and subscribe to my channel for more great tips on the stock market in the future. Okay, so in today's video, I'm going to go over why dividend growth is so much more important than a high dividend yield. Now, this is really important because if you aren't investing for dividend growth, you're missing out on huge returns in the stock market, and you're also going to end up with a lower dividend in the future. So this is critical for maximizing your long-term dividend income. So now let's take a look at why dividend growth is so much more important than dividend yield by looking at a few very popular ETFs. SCHD, QYLD, and XYLD. I know many of you are familiar of these ETFs as they're all high dividend yielding ETFs, SCHD being a dividend growth ETF, and QYLD and XYLD being covered call ETFs with very high dividend yields of over 10%. So when most investors look into buying dividend stocks or dividend ETFs, the first thing they look at is the yield. And if you wanted the best dividend yield here, you would obviously want to buy QYLD because it has almost a 12% yield compared to SCHD's only 3.64% yield. But this is very deceiving when investing in the long run. To see why this is, let's look at the long-term chart and dividend history of QYLD. Now, QYLD, when it first launched, it was about $25 per share, and since then, it has slowly dropped to 17.49. Well, even if you're not concerned about share price, the big issue is the dividend has dropped as well. One of QYLD's first dividends was 25.7 cents, and one of its most recent dividends was only 17.3 cents. So this is quite a significant drop in QYLD's dividend distribution. And we can see this in the trailing dividend in the top left hand corner here, as when it first launched, its yearly dividend trailing yield was about $2.58, just a little bit under that. And since then, it's gone a little bit down, got a little bit up, and it's back down to just over $2. So if we had bought this about 10 years ago, we would have been getting $2.60 per share, and now we'd only be getting $2 per share. And probably as QYLD continues on, this is going to drop lower and lower, meaning in the future, 10 years from now, 20 years from now, you're going to get much less money from your QYLD. And this is in sharp contrast to SCHD, where if we look at its long-term chart, it's been going up over the long term. And because of this, when it originally, around the time QYLD launched, its dividend payout was just under 25 cents, and one of its most recent distributions was closer to 70 cents. And now if we look at this on a yearly trailing basis in the chart in the top left hand corner, if we had first bought this just under 10 years ago, we were getting just under $1 per share of SCHD we owned. But currently today, we'd be getting $2.60, actually over $2.60 per share of SHD we own. And this starts showing why dividend growth is so much more important if you're investing for the long run. So now, to break down how important this actually is and how much it affects your long-term gains and dividend yield, I have the following chart showing a drip reinvestment strategy, and if we just look at the current stats as they were in the past and are today. So we have SCHD, QYLD, and XYLD. I took about the approximate share price from December 13th, 2013. SCHD was about $35.50, QYLD was $25, and XYLD was about $43.50. So the trailing dividend yield, this is the dividend yield over the last year. For SCHD was $2.64. For QYLD, it's $2.47, and XYLD, it's about $4.92. Now, the yield on cost, this is if we invested about 10 years ago, what would our yield on cost be? Well, with SCHD, it would be now 7.4%. This is quite a lot larger from the original 3.64% we see that SCHD is yielding. QYLD is 8.1%, which is much less than the 11.83% it's yielding, and XYLD is currently at about 11.3%, which is less than I think the 14% it's currently yielding. And their current prices are SCHD at about $69.91, QYLD at $17.49, and XYLD at $40.72. So this also shows where a lot of the gains and losses that you don't see if you're just focusing on the dividends come from, with SCHD having a 97% gain, QYLD having a 30% loss, and XYLD having a 6% loss. Now, the charts on the left here are from a dividend drip reinvestment calculator, and it really shows how much money you would have been missing out on by investing in these higher yield dividend ETFs compared to a dividend growth ETF such as SCHD. As you can see, if we compare XYLD to SCHD over this period, XYLD with dividends reinvested only made from $10,000 to $14,806, where SCHD made went up to $26,535. So this is a huge contrast in return of only 48% for XYLD compared to SCHD's over 165%. So with SCHD, we're getting close to 11% compounded annual growth rate, which the dividends reinvested, compared to XYLD's 4.26%. And also keep in mind, this has been in a bull market. So if there ever were a severe longer term bear market like 2000 or 2008, 2009, XYLD may actually be providing negative returns because of its very low total yield. And we can see the same thing with QYLD compared to SCHD. QYLD fared a little better than XYLD, returning to $17,767 from an original $10,000 investment. But again, as we know, in this same time period, SCHD returned $26,535. So this comes to only a 77% return for QYLD over almost 10 years, which is just over 6% per year, where SCHD, again, returned 165% and 11% annual compounded growth rate. So I hope you see why the dividend growth is so much more important, because in the long run, if you want to be able to retire on dividends and get that dividend yield 10, 20, 30 years in the future, you're going to want your dividends growing, and you're not going to want to be stuck with dividend ETFs or individual dividend stocks that are going down or sideways in price in the long term, costing you a lot of long-term gains and yielding you a lower dividend in the future. So I hope you enjoyed my video on why dividend growth is so much more important than dividend yield. Remember to subscribe to my channel, watch some of my other videos I've done. If you're a fan of some stuff like these covered call ETFs like QYLD, XYLD, you should definitely watch the videos I've done on the past of why they're a terrible investment, and I show you how to create a better strategy that produces more gains and the same or higher yield potentially. So remember to like, share, and subscribe. Leave a comment below, and I'll see you in the next video of my stock market investing tips.